So I just purchased stock in General Mills. This is a new stock in my portfolio. It's number 37. I already owned 36 stocks, so now I own 37 dividend-paying stocks. And I invest for dividends. One day my dividends will pay for all of my living expenses, but even now, tomorrow, if I want to tap into my dividend income, I could do that, and they could help pay the bills. And so I'm so excited to have General Mills in my portfolio. And I want to use General Mills as an example today because I've been producing videos here on my YouTube channel for a while. In the early days, I talked a lot about dividend reinvestment plans. It's been a while since I've spoken about dividend reinvestment plans, but I want to speak about dividend reinvestment plans again today because General Mills offers an amazing dividend reinvestment plan. This is one that, other than the one-time initial setup fee, otherwise it is free for investors like you and me to buy stock through this plan, to average into General Mills over time. And General Mills obviously is just one example of a company that has a really good dividend reinvestment plan. But I thought it was the perfect time to use this example to explain why dividend reinvestment plans are cool, to explain why they are beneficial to dividend growth investors and what they are all about. Hey everyone, welcome to the video today, PPC Ian, ppcian.com. I'm so excited to have you here today. And my YouTube channel, I receive a lot of questions, a lot of amazing questions, and a lot of them have been about minimizing commissions or maximizing dollars invested in the market. And another similar track of questions is about small-time investors, people just getting started out, may not have a ton of money to get started, but want to get started, but are also kind of concerned like, hey, can I even start with this amount of money? Is it too little money? Should I just wait or not start? Those types of questions are really encapsulated in today's video about dividend reinvestment plans. So if you're a dividend investor, there is something that's available to you that you may not even know about, that I think is one of the coolest things ever. And these have been available forever. It's so funny. In modern society, there's all these new apps and disruptive technologies, and they act as if they are so forward thinking. And a lot of them are. But that being said, sometimes we have to look towards the past. We have to look towards history for some of the greatest inventions. And in the world of personal finance and investing, especially for the individual investor like myself, who wants to live off of dividends, who wants to build a sizable dividend portfolio, who's been doing it for 20 years, but has also longer to go. This is one of those inventions that's been around forever that is so cool. And so what is a dividend reinvestment plan, or a DRIP? Also, there are these things called DSPs, direct stock purchase plan, very similar to a dividend reinvestment plan. And these days, they're kind of interchangeable, more or less. What these plans are is they allow investors like myself to buy stock directly from a company. And so there are really two ways to buy stock. One can buy it through a broker, and the broker then buys it on the market, one of the exchanges like the NYSE or NASDAQ. The shares sit in the brokerage account, and then the investor, myself, owns it through the broker. But the actual shares are in the broker's name. The other way of doing it is going direct to the company and saying, hey company, I want to buy stock from you. You bypass the broker, you bypass the middleman, you're really buying it directly from the company. And the company typically, sometimes they administer them themselves, but oftentimes they appoint a transfer agent to administer the dividend reinvestment plan. And in the case of General Mills, it's this company called EQ. It used to be called Wells Fargo Share Owner Services. And what a DRIP does is it allows one to buy the stock directly, and it allows them to reinvest their dividends, as the name claims. Moreover, it allows the company, from the company's standpoint, to foster a relationship. Companies want nothing more than to have long-term shareholders that have no intention of selling. And a dividend reinvestment plan allows the company to build that kind of relationship. So I want to start off today, I want to talk about some of the pros and the cons of dividend reinvestment plans. I think by going through the pros and cons, it's the best way, honestly, to define for everyone what a dividend reinvestment plan is. And then I'm going to jump into General Mills as an example. And I'm going to discuss their particular dividend reinvestment plan and how it's really cool. And so, dividend reinvestment plan, pros. First and foremost, if someone uses a dividend reinvestment plan to buy shares of a company, the stock is in their name. It's not in the street name. When you buy through a broker, it's in street name, meaning the broker's name. When it's in a dividend reinvestment plan and one buys through there, it's actually in their name. And so that's really cool. Another pro is oftentimes dividend reinvestment plans are completely free or almost completely free. In the case of General Mills, there's a $15 setup fee, and if one ever wants to sell, there are some fees attached to that. But in terms of ongoing purchases, averaging in each month, reinvesting dividends, there are no fees because the fees are paid for by the company. General Mills is paying those fees on the shareholders' behalf because General Mills wants to thank the shareholders. And General Mills wants to promote this type of activity of having long-term shareholders. And quite frankly, I think it's a viewpoint that General Mills has that they want to reward the shareholders. Why would they not want to provide these services to their loyal shareholders? Because the company is in business to reward the shareholders. And so oftentimes they're free. Another pro is dollar cost averaging. Especially in this market, it's quite volatile right now. I think we're kind of towards a market peak. It's corrected a bit, but I think it could correct more. In general, investors, myself included, are not very good at timing the market. It is very difficult to time the market perfectly. I've certainly gotten better at it over the years, and the reason I've gotten better is I typically start buying a stock or buy additional shares of stock once it's already corrected. That being said, no one has a crystal ball, and what is great about dollar cost averaging, so let's say someone has $1,200 to invest. Rather than investing that $1,200 right away, one could buy $100 worth of stock for 1 year, for 12 months. And so it's the same $1,200, but by buying $100 each month, it allows one to smooth out volatility. So if the market's up here and it ends down here, one's buying all the way down rather than just deploying all the capital day one. And so with most traditional brokerages, dollar cost averaging is not very easy because brokerages typically have commissions. And when there's a commission, obviously the commissions can add up if one has 12 purchases throughout the year. But even some of these new disruptive technologies and apps, they have free trades, no trading fees. I'll get to this point next, but they don't allow you to buy fractional shares. A lot of them don't. And let's say someone's buying a stock that costs $150 per share, but let's say one wants to deploy $100 each month. Well, if you can't buy fractional shares, you can't do any dollar cost averaging. You'd probably have to do every other month and batch $200 at a time, but then it leaves money on the table. Every other month will buy one share of stock, but then there's $50 that's not going to be deployed. And so traditional brokerages and even these new app-based brokerages, they don't allow dividend growth investors to dollar cost average correctly, in my opinion, because dollar cost averaging is all about buying fractional shares as well. With a dividend reinvestment plan, one can buy fractional shares. And so let's say one wants to deploy, again, $50 into a stock that's worth $100. Someone can do that and they'll end up buying half a share. And this becomes really cool from the standpoint of buying shares and dollar cost averaging in, but it's also neat in terms of dividend reinvestment because oftentimes when one receives a dividend, especially in the early days, it's not going to be enough to buy an entire share, but it would be enough to buy a fractional share. And so dividend reinvestment plans, they allow one to buy these fractional shares and they allow one to dollar cost average in over time the right way, in my opinion. What else is cool about these? Obviously, as the name implies, they allow one to reinvest dividends. Typically, this is going to be a winning strategy as one builds their snowball. One builds their wealth through dividend growth investing. In the early days, one's not living off the dividends. One wants to take the dividend, reinvest it, so that the reinvested money can generate even more dividends. And this is how the snowball can compound. And so by having a dividend reinvestment plan, by allowing it to do fractional shares, this dividend reinvestment can really compound one's success in growing their portfolio over time. What else do I like about these plans? They allow one just to stay in the game. I've done videos on this before. I'm going to link to it in the description below. It's been a while. One of my core philosophies in investing is that above and beyond everything else, especially for dividend investors who want to live off of passive income, either completely or partially, it requires persistence and many years in the game. What's great about a dividend reinvestment plan is one can set up this auto investment, and so they can have it so that money gets deployed every month. like clockwork, without having to do anything. It's all automated. It comes from someone's bank account, gets deployed. What's cool about this is it keeps someone in the game. It keeps someone focused on dividend growth investing, whereas one has to go through a brokerage, isn't dollar cost averaging, is just buying one off here and there. It's not as much in the game. And quite frankly, it's hard with a traditional brokerage because there's going to be fees, or even if there aren't fees, one can only buy the full shares. And so it's easier to be in the game when one can buy regularly without fees and with fractional shares. And on an automated schedule, quite frankly, where it's all automated. And so these are some of the cool things about dividend reinvestment plans. And also, quite frankly, these are easy. These are not very difficult to set up. These are not very difficult to manage. There's this ease of use. They're pretty lightweight. They're easy to use. And so for whether you're a small-time dividend investor, a big dividend investor, there are so many pros of dividend reinvestment plans that I think they're often overlooked as a vehicle. They're often overlooked. And I think if more investors knew about them, I think if more investors paid attention to these, they wouldn't be so scared of the stock market. They wouldn't be scared that, hey, I don't have enough money to get started, or I'm really concerned about these commissions. If they knew it was possible to start out with as little, in the case of General Mills, as $50 per month in terms of an investment, and to pay no commissions on that $50 per month that's being invested, and quite frankly, that General Mills, they only require $50 a month until you reach a $250 balance, so for 5 months. If people knew this, they knew this kind of thing, I think a lot more people would be compelled to get started. They wouldn't delay it so much. And in my opinion, from my own standpoint, is I have a firm belief that getting started is the key to success. Getting started, and starting small, quite frankly, not getting started too big. Getting started small and taking those baby steps, in my opinion, is the key to success in investing and, quite frankly, most other things in life. So let's get to the cons. As with anything in life, there are pros and cons. And so with a dividend reinvestment plan, the biggest con is it can be slow. One may place an order. They may say, hey, I want to buy my first $50 worth of General Mills. And I want to do that every month for the next 5 months. Or let's say, by contrast, someone doesn't want to do it every month. They just want to say, hey, I'm going to use the drip. I'm going to reinvest my dividends, but I just want to get started by investing $250. I want to do that right now. Well, one could go in to their computer now, set up the account, deploy the money, but that trade might not go through for a while. It might take a week, it might take 2 weeks, it might take longer. And that is the downside of a dividend reinvestment plan. For someone who needs to be able to buy instantaneously, they can't wait, oftentimes dividend reinvestment plan might not be the best vehicle for them. But if someone wants to get on a schedule and they're like, hey, on the 15th of every month, I want to buy $100 or $500 or $1,000 worth of stock in this company, and I'm okay doing that on the 15th of every month, then a dividend reinvestment plan is great. And so that's something just to be really careful of. On the buy side especially, the transactions can be slow, and some plans are faster than others. Oftentimes what happens is a plan like General Mills, where the company is paying all the fees, it can be a little bit slower because the company is going to pay for the bare minimum. And the bare minimum is batching orders and doing them either once per week or once every few weeks. The orders get batched together, meaning everyone's orders coming through all get done as one order at one designated time. And sometimes you have to wait for that designated time. Whereas other plans, oftentimes that are a little more expensive, that pass the fees along to the investor, they can be a little bit quicker. But that's just something worth noting, is it can be slow. But in my experience, when one is dollar cost averaging into a stock over time, having something instantaneously, in my opinion, isn't that important. It is if one's going to make a large lump sum. A large lump sum at one time might make more sense to go through a broker or go through a dividend reinvestment plan that has speedy transactions. But if one's just dabbling in, dripping in, getting started, having a little bit of a slower transaction, a lag, it's not, in my opinion, going to make a huge difference in the long run of things. And in fact, when you look at the dollar cost averaging side of things, that pro, and you kind of compare it against the con of being slow, because these two kind of go hand in hand sometimes, in my opinion, the pros far outweigh the cons, but just something to be aware of. Another con, I've seen this over the years, is fees can change. Whereas the fees right now for General Mills are free. One needs to, at least for ongoing purchases for dividend reinvestment, one needs to keep close eye on that because it can always change. These fee schedules change over time, and sometimes fees will pop up. And if someone is unhappy with the fees when they pop up, one of the things that someone can do is transfer the stock at that point into a brokerage account, or one can just keep the drip and live with the fees, knowing that they didn't pay any fees in the early days. And so it's all about weighing one's options. But it is worth noting that fees can pop up from time to time, and I've seen more and more of this in recent years, but there still are some really good drips out there, some really good ones that have very few or no fees, and General Mills is really a poster child of this. Another thing is just bookkeeping. This isn't really a con of a drip, it's more a con of the dividend reinvestment strategy, the dollar cost averaging strategy. If one is making more purchases over time, if one is reinvesting dividends, there are more transactions, there is more bookkeeping. Thankfully, the transfer agent will do all of the bookkeeping for you. Or if one is going through a brokerage, the brokerage will do it. These are the rules and regulations that are out there. That being said, as a hands-on investor, I like to have my own records. I like to calculate all the records myself as well, really from understanding how I'm doing, from seeing where have I been, where am I going. And with something like this, it can just take a little bit more time to keep those books. That being said, there's a pro of that. It keeps someone in the game. It keeps someone focused on what they're doing, on the task at hand. And so if someone is an investor and they have aspirations to live off of dividends either fully or partially, if one is spending some of their time keeping records and a little bit more time than they would have otherwise, I almost look at that as a good thing because it's important to stay focused, to stay in the game. And so let's just look into this General Mills example with a little bit more detail. So General Mills, how did I even know there was a really good drip? Well, actually, it was one of the comments here, so I'll just give that away here. Thank you for that comment. I love this comment. This was someone who started following my channel in the real early days, and I posed a challenge at that point, like, hey, go out there and seek these plans. They exist. And this investor found that, yes, it does exist, and they found General Mills. Okay, that's awesome. I love that. But anyways, let's say one didn't have that knowledge, that back knowledge, or didn't have the comments section on YouTube. It's easy. Once one has identified a company that they like, just go to the investor relations website of the company and then start looking through the frequently asked questions. Typically, they have a frequently asked questions, and one of them is, who is the company's transfer agent? And the next one is, does the company offer a dividend reinvestment plan? And oftentimes they'll say, yes, we do. Here's our transfer agent. Go here, and oftentimes they might even link to it. In the case of General Mills, that was exactly the case. They linked to EQ, used to be called Wells Fargo Share Owner Services. Once I was on Wells Fargo Share Owner Services, it was super easy to look at the plans. They have or now called EQ, on the bottom of the web page, kind of bottom right, it has this thing that basically said, browse all of our plans. And so I went there, I clicked it, and I was able to look at all of the drips that they offer. I was able to scroll through them, I alphabetized them, and then I found, okay, here's General Mills. And the most important thing I did is I looked at the prospectus. This is the most important thing with a drip. Once someone gets their hands on the prospectus, they can flip through it and get to the fee schedule. That's the golden kind of ticket with the dividend reinvestment plan, is what's it going to cost? What are the fees? And so I started looking through the fees. There was a $15 one-time setup fee. Other than that, no ongoing purchase fees. If one wants to average in over time, they can do so with as little as $50 per month, and they can do that by paying no fees, or rather the company, General Mills, paying the fees on their behalf. There's one stipulation that if you want to get started, you have to invest $250 upfront, or you can do $50 per month for 5 months to reach that $250. That was one hurdle that an investor needs to pass. So if someone has less than $250 or doesn't think they'll be able to do 50 months for 5 months straight, it would probably be better to save up a little bit then before getting started and committing to something that would be impossible to hit. But I would say in general that is a pretty low bar in the world of investing. And I think most people out there who are watching this YouTube channel or who are interested in investing for dividends, if they're finding a challenge coming up with that $250 over the course of 5 months, I think that would be a really good personal challenge just to set forth. Maybe one can pick up a little extra work. Maybe one can do a little side hustle, some side projects. Maybe one can cut costs and save a little bit of money and try to create that $250 of capital to get started. And then with this plan with General Mills, there was no dividend reinvestment fee, so no fee for reinvesting dividends. There were some fees related to selling, but if you've been watching my channel for a while, I never plan to sell. So I don't really look at those fees as being important, because once one's in a dividend paying stock, the whole goal of being that in that is to receive the dividends over time, to live off the dividends, to reinvest them and eventually use them to pay for stuff. And so selling that stock, why would one want to sell the stock that is basically paying for their living expenses? It just doesn't make a lot of sense to me. And so that's an overview of what I found with General Mills. Now, there are other dividend reinvestment plans for many companies. Most big blue chip publicly traded companies that pay a dividend, they're going to have some kind of dividend reinvestment plan. It might not be with EQ, it might be with another transfer agent. But if one wants to find out about it, all they have to do is they have to go to the investor relations website for that company and try to get to the bottom of who the transfer agent is. And so just a really interesting video today. I'm really excited to present this because I get so many questions about basically fear of getting started, so many questions about commissions. And in my opinion, a vehicle like a dividend reinvestment plan removes all of those concerns and barriers. Those are gone now. And really, there should be no fear of getting started when the bar has been removed. It's very easy to get started. It's easy to get started with a low enough amount of money where even the most conservative investor can put those concerns about volatility and risk aside. And that's what's great about this, is it allows someone to focus on the dividend strategy with a clear mind, with a clear conscience. And so I really like this, and it's an old world concept, doesn't get a lot of press, never going to be excited around for water cooler talk, never going to be exciting for people talking about tech stocks, buying low, selling high, people talking about Bitcoin, never going to be excited for that group. But that's okay, because we've got our own community here on PPC Ian for dividend investors, and we're the kind of people that get excited about this because we know that it's going to buy us in the long run financial freedom, or at least partial financial freedom, where there's cash flow coming in. It can be used to supplement income. And in my opinion, that's what it's all about. It is so incredibly exciting. And so before I end today, I want to add a disclosure. I personally own General Mills, ticker symbol GIS, in my portfolio. I'm long on General Mills. Also, a friendly disclaimer. I'm not a licensed investment advisor. Today's video is not investment advice. This video is just for fun and entertainment. If you are going to go out and invest in the stock market or anywhere else, please do consult a licensed financial advisor first. So if you're still watching, I have a question for you. Do you like dividend reinvestment plans? What do you think about them? Do you participate in them? Do you not participate in them? I'd be curious about your thoughts in the comments below. There's a lot of interesting thoughts that I know are going to arise out of this video, as they do from each video. And there's pros and cons. I mean, another con that I didn't even list is some people like to selectively reinvest, meaning they don't want to reinvest the dividend in the company that paid the dividend. They want to pool all their dividends and then reinvest into a company that's on sale. Because what if General Mills does really well? It goes way up at the peak. Does one want to reinvest General Mills dividend in General Mills, or do they want to put it in something else that's gone down, that's corrected? I've done a whole video on this. I'll actually link to it in the description below. I kind of do a little bit of both. The companies that I love the most, General Mills honestly probably fall into that category. I'm going to reinvest in the company that paid the dividend. If there's a company in my portfolio that I feel like it's reached a critical mass, but I don't want it to be a core position, I don't really want to grow it too much more, it's not my core thing, sometimes I'll pool dividends from those types of companies and selectively reinvest in others. So I do a little bit of both, but that's something to think about with dividend reinvestment plans. But I'd be curious, what do you think about dividend reinvestment plans? Before I leave today, also I wanted to reach out and let you know I'm on Instagram. If you have questions for me, please put them in the comments below. I try to respond to all of those, but if you want to get in touch with me even quicker, I'm responding to Instagram in a even quicker fashion. I'm really checking it throughout the day. It's a great way to connect with me, and so I'll link to it in the description below. Thank you so much for watching this video today. This is Ian Lopuk from ppcian.com in another dividend reinvestment video, dividend investing video. I will see you in the next one.